Starting today, the United States government is directly investing in your child's financial future whether you asked for it or not. As of May 28, 2026, the U.S. Treasury has launched the Trump Accounts app, and according to Treasury Secretary Scott Bessent, nearly 6 million American children have already been enrolled. Each eligible child receives an initial $1,000 contribution funded by U.S. taxpayers, with the accounts officially going live on July 4. That is right, Independence Day is now also the day America's youngest citizens become, in the government's own words, shareholders in the greatest economy on earth. But what exactly are Trump accounts, who qualifies, and should you be excited or worried? In this video we are breaking down everything you need to know about Trump accounts, what they are and how they work, who is eligible and how to sign up before July 4, the political forces and tech partners behind the launch, what financial analysts are saying about the risks, and the key questions millions of parents are already asking. Stay to the end because the details in the fine print may surprise you. The story begins on May 24, when Treasury Secretary Scott Bessent posted an early preview of the initiative. According to posts from @SEC Scott Bessent, each eligible child would receive an initial $1,000 contribution from the U.S. Treasury to support long-term growth. That framing government's seed money for children's investment accounts set the tone for what was coming. Then on the morning of May 28, the U.S. Treasury fired the starting gun. The official account declared the Trump Accounts app the main interface for the most historic policy for American families in decades, describing it as accessible for every household and promising that children would be able to monitor their path to prosperity. Secretary Bessent echoed this on his personal account, stating that for too long, financial markets felt out of reach for too many. By mid-morning, the SEC's official account joined the rollout, unusual for a regulatory body calling the program a historic opportunity for our next generation to build wealth. By afternoon, the official POTUS account had posted the Apple App Store and Google Play download links directly. Senator Ted Cruz, who according to posts from Ted Cruz drafted and passed the legislation into law, called it a chance for every child in America to benefit from compound growth and become an owner in the greatest economy on earth. Senator Tom Cotton followed with a video post addressing working families in Arkansas. By evening, posts from Yahoo Finance reported the headline figure that would dominate the news cycle: nearly 6 million American children had already been signed up. Robinhood, BNY Global, and ND Studio are cited as technology. So what do we actually know about how these accounts work and what questions remain unanswered? The first question many viewers are asking is, who exactly qualifies, and what happens to the money? The short answer is that the program targets American children, with each eligible child receiving an initial $1,000 Treasury contribution. The accounts are described as tax-advantaged, and the program appears to function as a long-term investment vehicle rather than a cash transfer. The app, built in partnership with Robinhood, BNY Global, and ND Studio, is live on iOS and Android, though the accounts themselves do not officially activate until July 4, 2026. Exact eligibility criteria and full investment options had not been publicly confirmed in the materials reviewed for this video. Exact figures have not yet been confirmed. A second pressing question is, what does the SEC's involvement tell us? Typically, the Securities and Exchange Commission is a regulatory body, not a promotional one. Its official account posting enthusiastic launch content describing the program as a historic opportunity is unusual and may suggest a deliberate whole-of-government communication strategy designed to maximize enrollment before the July 4 deadline. On that front, the involvement of Robinhood as a technology partner is notable. Robinhood built its brand on democratizing investing for younger, less experienced retail investors. Its selection here may signal that the program is designed to introduce a new generation to equity markets, a long-term politically and economically significant outcome. Some analysts believe programs of this type could meaningfully shift wealth accumulation patterns over decades. Others caution that market-linked accounts expose children to downside risk not present in traditional savings bonds or fixed-rate instruments. Who exactly qualifies, and what happens to the money? The program appears to target American children, with the $1,000 Treasury contribution invested in a tax-advantaged account. Exact eligibility thresholds and investment allocations had not been fully disclosed in public-facing materials as of May 28, 2026. Exact figures have not yet been confirmed. Why is the SEC a regulatory body actively promoting a government investment product? This may suggest a coordinated whole-of-government communication strategy designed to maximize enrollment before the July 4 launch. Some observers believe it reflects a broader shift in how the current SEC views its mandate from pure regulation toward actively promoting capital markets participation among new demographics. In the United States, the immediate impact is being felt at the household level. According to posts from at Yahoo Finance, nearly 6 million children have already been enrolled, which at $1,000 each represents a minimum $6 billion government commitment. For families in lower income brackets who have historically had little or no exposure to stock market investing, this could represent a first meaningful point of entry into wealth building. However, critics may point to the market-linked nature of the accounts. Unlike FDIC-insured savings, these funds could lose value in a market downturn. In Arkansas specifically, Senator Tom Cotton's video post directly addressed working families in his state, framing the accounts as a secure savings vehicle for the next generation. This pattern of senator-level amplification by state suggests the program is being marketed at the local constituency level, not just nationally. In Washington, D.C. and the political arena, the optics are unmistakable. With the POTUS account, the White House, the Treasury, the SEC, and 2 Republican senators all amplifying the launch on the same day, this is a carefully orchestrated political event timed to the nation's 250th anniversary. The July 4 activation date functions simultaneously as a policy milestone and a patriotic branding moment. In global financial markets, the story carries a secondary signal. Directing millions of new young investors toward equity markets via a Robinhood-powered platform could, over time, influence retail participation rates, ETF fund flows, and long-term equity demand. International observers may interpret this as the U.S. doubling down on a model of citizen shareholder capitalism that stands in deliberate contrast to more state-directed economic models. Not everyone is celebrating this launch, and the strongest version of the skeptical argument deserves to be heard clearly. A government-branded, politically named investment account launched with presidential branding and coordinated institutional promotion raises genuine questions about financial autonomy, the use of public funds for what some may see as a partisan political exercise, and the long-term stability of a program whose terms could change under a future administration. Market-linked accounts expose children to equity downside risk that traditional savings instruments do not carry. Using Independence Day as a branding milestone may strike some observers as the politicization of a civic holiday. And there remain unresolved questions about what happens to the accounts if a child is not a citizen, moves abroad, or if program terms are altered. At the time of this video, no prominent critical voices had yet surfaced within this specific dataset, but the policy debate will almost certainly intensify before the July 4 activation date. Here is the detail most coverage is missing. The accounts go live on July 4, 2026, America's 250th birthday. Whether that is visionary nation-building or masterful political theater may depend entirely on what happens to the money when markets open the next morning. If you have a child under 18, search Trump accounts on your app store right now and decide for yourself. Then drop a comment below. Are you signing your kids up or are you waiting for more answers first?